Hey traders, hope everyone had a good week. This is the recap for my trades this past week. So let's jump right into it. So the week before, I had added 3 new trades. I had put a trade on ATVI, Chewy, and SLV. You can see I got in those on 8.6 and 8.7. So for ATVI, I had sold the 83 strike expiring 8.14, and I received a 64-cent credit. ATVI was below my strike price, so I went ahead and rolled it. I rolled it to next week, the 21st, and I was able to roll it down to the 82 strike and still get a credit of 5 cents. I'm still getting some questions about these credits that I'm showing here. These are net credits, so some people are saying that I'm not including the cost to buy back the option, but this does include that. The way my broker shows it is it shows the difference between the cost to buy it back and the new credit that I'm receiving in the next week that I'm rolling to. So this is the difference between the two. I am accounting for both of that. As a matter of fact, my broker doesn't even show me how much I'm paying to buy it back. And really there's no need to. I don't really care what the cost is to buy it back as long as the week that I'm rolling it to, the credit's higher than what I'm paying to buy it back. If we look real quick at rolling ATVI, I'm going to right click on my option and go ahead and see what it would look like if I roll it. So if I right click on it, I can go to create rolling order. You can see when it brings up the order entry screen, it doesn't show me the cost to buy back these 8 contracts. If we look here at the bottom row, it says buy 8 contracts, 8 TVI for the August 21st. That's the option that I'm in now. And I'm rolling it to the following week of 8/28, which would be a sell. So I'm closing out one and I'm selling a new one. It just shows me the difference between the two. It's 34 cents. So again, I don't know if I'm paying $5 to get this back, $2 to get this back. I just know that the week that I'm rolling it to, keeping it at the 82 strike, the difference is 34 cents. And that's the credit that I'm showing you guys in my email alerts and in the spreadsheet. So it does account for the cost to buy this back. And then I can go to look to see if I lower the strike price to say 81, I'm still getting a credit of 14 cents by rolling it down to the 81 strike. If I look at the 80, now I would have to pay a debit. So I wouldn't want to go that low because I'd have to spend money to do it. So I would stick with the 81 strike and still get a 14-cent credit. So hopefully that clears that up. Again, I've got a video out there about rolling and address a lot of this. So if you haven't had a chance to watch that, maybe that will clear up any more questions about rolling. The other thing I did is I added a new column called unrealized loss. So I wanted you guys to see what the benefit of rolling is, because right now, if I were to close this trade out, I would have a loss of $1,296 in this trade. Right now, it's an unrealized loss because I'm still in the trade and I'm going to keep rolling until the stock recovers. But if I decided to just quit and not roll it, that's how much money I would lose, $1,296. Okay, the next trade was Chewy. I put that on 8.6. I'd sold the 54 strike for the 8.14 expiration. I received a 63-cent credit, but I had to roll it because Chewy was below my strike price. I rolled it down to the 53 strike for next week and got a 1-cent credit by doing so. And again, you can see if I were to close Chewy out right now, I would lose $550 if I decided to not roll this anymore. But again, I'm going to keep rolling so I don't have to realize this $550 loss. SLV, that's a trade I put on 8.7. I sold the 24 strike put for 41 cents and I closed it for 13 cents. SLV at one point had dropped below my strike price. So when it went back above it, I decided to go ahead and close it. I didn't want to risk holding it until the last day and it dropped back below. So I closed it on the 13th, which was one day before expiration. And I still got a nice profit of 28 cents or $280 for 4 trading days. Uber, that was the other one I put on the week before. So I opened it on 8.7, sold the 31.50. and received a credit of 53 cents. Uber dropped below my strike price as well, so I had to roll it. I was able to roll it down to the 31 strike for next week and got a credit of 7 cents. And again, this would be a $730 loss if I were to close this out right now and to stop rolling. The next trade is a SPY trade. So on Monday, I sent out an email alert that I wanted to add a hedge to my portfolio. So I decided to buy the 300 strike put in SPY for the October 16th expiration. That cost me $4.23 and I did 7 contracts. AMD is another trade I put on Monday. I sold the 78 strike. I received a credit of $1.09. The next day, AMD dropped below my strike price, so I decided to go ahead and roll it. So I rolled it the following day. I rolled it down to the 76 strike to next week and received a 19-cent credit. I wish I hadn't have rolled early because AMD eventually recovered back above that 78 strike and I could have gotten out of this without having to roll. But I decided to roll early just so that I could get the strike lowered. As I've mentioned in the rolling video, that's the trade-off sometimes. You roll early in hopes to get a bigger credit and lower the strike, but then there's scenarios where if you had just held on and waited, the stock would have recovered and you wouldn't have to worry about rolling. So that's just the decision you have to make if you want to roll early to get the bigger credit, or wait it out realizing that if it doesn't recover when you roll, you probably won't be able to roll down a strike or get as big of a credit. So I could actually close this out right now for a $380 profit because it is above my strike price right now, but I'm going to hold on to it for a few more days and wait to see if I can get some more of the credit out of this trade. The next one was an Apple trade. So on Thursday, I sold the 470, 475 call credit spread. I received a credit of 56 cents. Apple dropped the next day and I was able to close it out for a penny. So I basically was able to capture the majority of the credit and made $550 on that in one day. As I mentioned in the email alert when I closed it out, I only closed out the short leg. I only closed out the 470 strike. There was no need to close out the 475 strike because it was worthless. The way my broker works, if you close out the spread, if you close out both legs together at the same time, I would have been charged commission on both legs. But just closing out the short leg, my broker does not charge commission if it's under 5 cents. So actually, I was able to close this trade out for free because I did not close the 475 strike out. I was able to close the 470 out for free because it was below 5 cents. But again, if I would have tried to close this out as one trade, I would have been charged my commission for both legs. The last trade is GEOS. I'm finally out of this trade after rolling it for over 2 months. 45 trading days. I started at the 25.5 strike and was able to gradually roll it down to the 23 strike. Every time I received a credit, except for that one time I rolled it and paid a small debit to get it down a strike. In total, I got $900 in credits. So I would have held this until expiration, but GEOS, for whatever reason, moved up their earnings report. It wasn't supposed to be until early September, but they decided to report earnings this past week. So I decided to close it out before the earnings announcement because I didn't want to risk it being bad earnings and the stock dropped back below 23 and I'd be stuck rolling it again for a few more weeks. So I went ahead and closed it out for 77 cents. That gave me a small profit of 13 cents, a total of $130 for this 45-day period. If I would have held on to GEOS, it did stay above 23 on Friday, so I could have kept the majority of this credit. So really, I gave up $770 by closing this out when I did, but I'm just happy to be out of this trade and still closed it for a profit. So you can see in total for the week, I made $960 of profit. I've got an unrealized loss right now of $2,196. So again, if I would have just closed all these trades out and decided not to roll them, take my loss and move on, then I would have actually have lost this week. So that's all I got for this video. I hope everyone has a great weekend. Thanks.